Hey, Justin Gold here. When it comes to building wealth, not all assets are created equal. Some put money in your pocket, some give you leverage, and others just drain your wallet. Today, I'll show you a simple framework to sort every asset you own into 4 buckets. So, you know exactly what to leverage, stack, enjoy, or cut loose. By the end, you'll have the tools to make your assets work for you, not the other way around. Let's start with Bucket 1, Collateral Assets. This is the foundation of a smart wealth strategy, and understanding it can open up a world of financial flexibility. Think of collateral assets as your financial safety net, resources you can tap into when you need cash, but without having to sell or liquidate your investments. Instead of breaking up your portfolio or selling your home, you can use these assets as leverage to access funds, all while your investments continue to grow in the background. These are assets you can borrow against without selling, meaning you maintain ownership and potential future gains. This is a powerful tool for anyone looking to maximize their financial options, whether you're an entrepreneur, a homeowner, or an investor planning for the long term. Common examples include real estate, which is often the largest asset people own, as well as digital assets like Bitcoin, which are increasingly being accepted as collateral by innovative lenders. Even specialty assets like valuable vehicles or farmland can sometimes be used, depending on the lender's criteria. Or consider a solid securities portfolio, stocks, bonds, or mutual funds that have a proven track record. These can be pledged as collateral for loans, giving you access to liquidity, while your investments remain intact and potentially continue to appreciate. For example, you can use a home equity line of credit, or HELOC, to tap into the value of your home without selling it. Investors can also use margin loans to borrow against their stock portfolios, unlocking cash for new opportunities or emergencies, all while keeping their core investments in place. Crypto is joining the game too. Some platforms now let you borrow against your cryptocurrency holdings. This means you can access cash while still benefiting from any future price increases, allowing your crypto to keep compounding gains. It's a modern twist on an age-old financial strategy, but not every asset qualifies. Lenders look for stability and value, so you want assets that are recognized, have a history of appreciation, and are relatively easy to value and transfer. Blue-chip stocks, gold, and even certain collectibles or art can sometimes be used, but the key is reliability and market acceptance. Collateral assets multiply your options, letting your money work in the background. They provide a way to fund new ventures, cover unexpected expenses, or simply give you peace of mind, knowing you have resources to draw on without disrupting your long-term plans. Always ask, can I use this asset to unlock more opportunities without giving up ownership? If yes, you've got a classic Bucket 1 asset. Building a strong base of collateral assets is a smart move for anyone who wants to stay flexible, seize opportunities, and keep their wealth growing for the future. Bucket 2 is all about productive assets. These are the assets that pay you: rental properties, dividend stocks, private lending, royalties, or hands-off businesses. The magic? They generate income month after month, letting your wealth snowball. Focus on consistency and scalability, not just high returns. A few high-quality productive assets beat a pile of maybes every time. Ask yourself, is this asset putting cash in my pocket? If not, it's time to get serious about finding ones that do. Stack these, and your future self will thank you. Now, let's talk about Bucket 3, lifestyle assets. These are your fun assets: cars, vacation homes, art, watches. They're for enjoyment, not returns, so don't confuse them with investments. The key is moderation. Enjoy them, but don't let them crowd out your productive or collateral assets. If lifestyle assets make up too much of your net worth, reassess. Treat them as rewards, not the foundation of your financial plan. Bucket 4 is deadweight, assets that cost you more than they're worth. Think old electronics, unused timeshares, or investments that go nowhere. These hang around out of habit or sentimentality, but every dollar tied up here isn't building your future. Ask, does this asset pay me? Can I borrow against it, or does it bring me joy? If not, let it go. Sell, donate, or repurpose. Free up that capital and mental space. Every time you cut dead weight, you create an opportunity to redeploy that money. Don't let inertia hold you back. This is one of the easiest ways to accelerate your wealth. Now, let's put this into action. Do the bucket audit. List every asset you own, big or small. Assign each to one of the 4 buckets: collateral, productive, lifestyle, or dead weight. Be brutally honest. Don't fudge the categories. Put a realistic value next to each asset. What you could actually get if you sold it today. Step back and see where your wealth is parked. Too much in lifestyle or dead weight. Time to shift. This audit isn't about judgment, it's about awareness and opportunity. Grab a pen or open a spreadsheet. The insights you gain here set the stage for everything else. Move 2. Activate your dormant collateral. Many people have valuable assets sitting quietly in the background of their financial lives, not realizing these resources can be put to work. Dormant collateral refers to the equity or value locked up in things you already own, like your home, your investment portfolio, or even your cryptocurrency holdings. Instead of letting these assets simply sit and accumulate dust, you can unlock their potential to help you reach your financial goals faster. If you own real estate with equity, consider exploring a home equity line of credit, often called a HELOC, or a cash-out refinance. These options allow you to borrow against the value you've built up in your property, often at lower interest rates than unsecured loans. This can be a smart way to access funds for investments, business opportunities, or even to consolidate higher interest debt. Just remember, your home is on the line, so careful planning is essential. For those with investment portfolios, check if your brokerage offers a margin loan or a securities-backed line of credit. These financial tools let you borrow against the value of your stocks, bonds, or mutual funds without having to sell them. This means you can keep your investments growing while still accessing liquidity for new opportunities. However, margin loans come with their own risks, including the possibility of a margin call if your portfolio value drops. So be sure to understand the terms and risks before proceeding. Crypto holders. If you own digital assets like Bitcoin or Ethereum, some platforms now let you borrow against your crypto without selling it. This can be a way to access cash while still holding onto your coins, potentially benefiting from future price appreciation. Crypto-backed loans are a newer option, so research platforms carefully and be aware of volatility and security risks. Leverage is powerful, but it's a double-edged sword. Always use it wisely, have a clear repayment plan in place, and make sure you're comfortable with the risks involved. If markets move against you, or if your income changes, you need to be prepared. Consult with a financial advisor if you're unsure, and never borrow more than you can afford to repay. The ultimate goal is to unlock capital that would otherwise sit idle and put it to work in higher yield areas. By activating your dormant collateral, you can potentially accelerate your wealth-building journey, diversify your investments, or seize opportunities that might otherwise be out of reach. Think of it as making your money work as hard as you do. Take time to review your Bucket 1 assets and understand your borrowing options, even if you don't plan to use them right away. Knowing what's available gives you flexibility and confidence to act quickly when the right opportunity comes along. Preparation is key to making smart, strategic moves. Don't let your best assets gather dust. Activate your dormant collateral and put it to work for you. With the right strategy, you can unlock new possibilities and take your financial future to the next level. Move 3. Upgrade Bucket 3 into Bucket 1. Can you turn lifestyle assets into collateral or productive ones? Sometimes, yes. Rent out your vacation home, lease your luxury car, or borrow against valuable art or collectibles. The goal is to make your lifestyle assets work harder for you, without unnecessary risk. If an asset can't be upgraded, consider letting it go and redirecting that value elsewhere. Not every lifestyle asset will qualify, but even unlocking a portion of their value puts you ahead. Get creative. The more assets you move into productive or collateral status, the faster your wealth grows. Move 4. Cut Bucket 4 and redeploy it. This is a crucial step in optimizing your financial life and accelerating your journey toward wealth. Many people accumulate assets over time that no longer serve them, or worse, actually drain their resources. These can be physical items, investments, or even subscriptions and services that quietly eat away at your capital. The key is to identify these underperforming or unnecessary assets and make the conscious decision to let them go. Free yourself from dead weight. Sell, donate, or eliminate assets that cost you more than they're worth. Think about that old car sitting in your driveway, the gadgets collecting dust in your closet, or even investments that consistently underperform the market. These are all examples of dead weight that can hold you back financially and mentally. By letting go of these burdens, you not only clear physical and mental space, but you also unlock capital that can be put to much better use elsewhere. Once you've freed up capital, immediately redeploy it into collateral or productive assets. This could mean investing in stocks, real estate, or even starting a side business, anything that has the potential to grow in value or generate income. The goal is to ensure that every dollar you have is working for you, not sitting idle or worse, losing value over time. Don't let your money stagnate. Put it to work in areas that align with your financial goals and risk tolerance. Don't let perfection slow you down. Act quickly so your money starts compounding in the right direction. It's easy to get caught up in analysis paralysis, waiting for the perfect opportunity or the ideal market conditions. But the truth is, time in the market beats timing the market. The sooner you redeploy your capital, the sooner you'll benefit from compounding returns. Remember, action beats inaction every time when it comes to building wealth. Make this a habit, review your assets at least once a year, and cut dead weight as it creeps in. Life changes, markets shift, and what made sense last year might not make sense today. Set a recurring reminder to audit your portfolio, your possessions, and even your recurring expenses. This regular check-in ensures you're always moving forward and not letting inefficiencies pile up unnoticed. The more efficient your portfolio, the faster your wealth grows. Every dollar that's not tied up in dead weight is a dollar that can be invested, compounded, and multiplied. Over time, these small decisions add up to significant gains. Efficiency isn't just about cutting costs. It's about maximizing the impact of every resource you have. Cutting dead weight isn't just good for your bank account. It's freeing. You'll feel lighter, more focused, and more in control of your financial destiny. The process of decluttering your assets can also declutter your mind, giving you the clarity and motivation to pursue bigger goals. Take action this week. Pick one dead weight item, eliminate it, and reinvest that capital. It doesn't have to be a massive change. Even small steps can create momentum. The important thing is to start. By making this a regular part of your financial routine, you'll build a leaner, more powerful portfolio and set yourself up for long-term success. Here's your challenge. Pick one item from your Bucket 4 list and make a plan to eliminate it. Don't overthink, just take the first step. Free up that capital and move it into a productive or collateral asset. Start the loop and watch your wealth-building momentum take off.